Investors are returning to property. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to talk about a domain article which is highlighting competition for first home buyers as investors start returning to property. First home buyers face stiff competition as investors return to the property market. Now, before we have a look at this article, let's just go through and look at the current latest asking prices. And this is the capital city average. And well, as we can see here, we're going up to over $1 million. What's going on here? Oh, we got to go back. We're going up to over $1 million, everyone. You've got 978 for 3-bedders, and apartments are flat. You can certainly see houses, so detached houses are going up higher than apartments, the more popular investment. Then if we look at all, including national, that means that we've got the regional as well there. We're going up to 684,592 for houses, and apartments, again, are flat. If we have a look in Sydney, well, $1.5 million for all houses, 3-bedders, $1.4 million, everyone. The average asking price. And here we have in Melbourne, 1,990,000. And then finishing off with Brisbane, we're up to 677. And our 3-bedders, oh, we're only at 595. We haven't quite gotten up to 600,000. And again, our apartments are starting to creep up towards 400,000. So let's have a look and go through this article. First home buyers face stiff competition as investors return to the property market. Now, is this more FOMO, or investors, are they starting to jump back in? First home buyers are beginning to be squeezed out of the housing market by investors who are driving stiff competition at auctions, agents report. The change is trickling through on auction floors, with more investors registered to bid on properties, sending prices higher. Some are determined to buy bricks and mortar rather than leaving money in the bank, where it largely collects dust due to the low interest rate environment. Well, here's the argument that I'm making, that even regardless of how bad things are, property is Australian gold. To the average Australian, how many people at a barbecue would you talk about that would just scoff at you for the idea of investing in precious metals as a hedge? But property, oh yeah, mate, yeah, get into property. Everyone gets into property. It's the thing here in Australia. It comes after the latest housing boom has been fueled by owner-occupiers keen to take advantage of cheap mortgages to move into more spacious homes with room to work remotely. Investors often return to the market once prices rise and they can see the potential for capital growth. In April, investor loans across Australia increased by 2.1%, reaching a record 4-year high of $8.05 billion. The latest Australian Bureau of Statistics data shows. First home buyer loans dropped 1.9% in the same month. You can see here it is. Total refinancing, or total excluding refinancing, owner-occupiers excluding refinancing, and investors excluding refinancing, everything shooting up. And here's new loan commitments to owner-occupier first home buyers. So the first home buyers are starting to trickle down, but look how high it's gone. In New South Wales, where investor loans increased by 2.5%, Bresic Whitney, head of sales, Thomas McGlenn, said while investor activity had picked up in the past month across the board, they would fuel price growth in the unit market in particular in coming months. We are seeing investors returning to buying properties that are semis, terraces, freestanding homes. Where we are going to see an uptick in prices because of investors is in the apartment market, Mr. McGlynn said. They were taking confidence in an improving rental market and the opportunity for a stronger run in unit prices. Investors are seeing them as good rental yields, but I feel that there may be a little run still on apartment prices, he said. The fact that you're buying very, very good value on apartments as opposed to terraces that have similar square meterages. First home buyers will begin to feel the pinch as they try to remain eligible for discounted stamp duty and government grants by paying less than the relevant price thresholds, he said. First home buyers will start to compete with investors, which will make it difficult for them. They could definitely push prices over those numbers, he said. But investors are already competing for homes at different price points. At the weekend, an investor dropped $1.8 million on a renovated Marrickville house outbidding a first-home buyer who had missed out at auction several times this year. In another instance, an investor picked up a 3-bedroom unit at Lane Cove, outbidding several first-home buyers, said Ben Ploy, founder and director of BFP Property Buyers. In the past 2 months, 80% of his new clients had been investors. There is a massive influx of investors coming to the market now, a lot of cash buyers, which is interesting, he said. With interest rates so low and inflation on the rise, cash in the bank is kind of worthless. It's the old chase for yield and the flight to safety. In terms of increasing price, it will start to trickle down, and in terms of pushing up competition, 100% it's been around for the last month. He said even rent investors, who are first-home buyers priced out of their location of choice, who rent where they want to live and buy an investment elsewhere, were adding fuel to the fire. Many have turned to buying investment properties in more affordable states, including Queensland, where price rises have been more moderate. Loans to investors in the Sunshine State jumped 7.1% in April. In Victoria, investor lending grew 2.2% in the same period, and agents reported investors preferred houses over units as they continued to suffer the effects of the pandemic. Many Melbourne investors were looking farther afield in country Victoria, said Peter Kakos, the Agency Victoria General Manager. What you'll find is people will look at purchasing something out of Melbourne in a 4 or 5 year plan to move there, he said. It's often good growth and good yield. It makes sense for these lifestyle destinations, but investors were experiencing FOMO like owner-occupiers, said sales director and auctioneer Archie Staver of Nelson Alexander, pushing out first-home buyers as they are hit first by affordability constraints. We're seeing a steady return of the investor, but they're focusing on the traditional housing market more, so that an apartment market, which suggests to me that it's possible baby boomer money. Mr. Saver said, adding that many investors were still small self-managed super funds that were looking to park their cash in property than in the banks. They are more heavy hitters attending the same auctions. By heavy hitters, we simply mean people who have the capacity to pay more than the reserve, to get emotionally involved in a bidding war. When you have people with more means that get emotionally involved, the auction results speak for themselves. In April, Melbourne recorded a clearance rate of 69.9%. Domain data showed dwelling prices were up 1.8 to $750,000. Well, what's causing this issue, or what's the issues that we have here? You've got to remember, our government has come to the rescue. They have juiced up this housing market, guys. We've got a cash rate that's insanely low. 3% used to be the emergency levels. You've got home builder. You've got first home builder grants. You've got up to 88 grand that people are getting from government handouts. You've got 5 and 2% loans. You've got negative gearing, which is systematically just driving people into property and reducing our economic complexity in other parts of the economy. You've got negative gearing and, well, even the super withdrawals. But look at that home builder spike, everyone. Approvals shot up. So don't forget councils. Don't forget the not in my backyard crowd, the people who will not, allow developments or push for the restriction of developments, who want to keep their communities the way they are. But that's going to drive up costs of housing, guys. That's what it is. So what can you do? You need to advocate for local government to increase the supply of housing and make it easier to build housing. And don't vote for parties who limit the development or construction. And watch out for the not in my backyard crowd. Investors will vote for Greens and hippies and all of that, even if they don't agree with them, because they know it'll keep the value of their properties. What do you think? Anyway, guys, let me know your thoughts and opinions on this one. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, guys, and I'll see you next time. Bye for now.